Snipers, you have to see what's happening to the Bitcoin price this Tuesday as we have tested the 100-day moving average showing confluence at 44,800, exactly as we've predicted here on the Snipers channel with our emergency update yesterday. So today we're going to take a look at the macro and the micro charts because we have this potential Adam and Eve bottom here where Bitcoin could potentially come and test the $60,000 level. And the reason this is extremely important right now is because not only would a break above 44,800 validate the Adam and Eve bottom, but we would also invalidate this bearish head and shoulder neckline that we've been monitoring here on the Snipers channel, because you can see we are, not a surprise, back here testing this as a major resistance. And this is going to be the fourth time here. You can see we've tested this 3 times already that we're testing this resistance level. The more times you come and test the resistance level, the likelihood of that resistance level breaking becomes extremely high. And so we could potentially even now say that if we were to break 44,800, Bitcoin's price target could potentially actually be towards the $58,353 level, right around 60,000 US dollars. And that would be based on the Adam and Eve bottom that we have. And this is actually a very good chart that I want to start the video off with, because I think that this could be exactly how this plays out. If we see a break above 44,800, it's a more slow approach to seeing upside. It wouldn't be as strong as we typically see with Bitcoin in price discovery, seeing an exuberant rally. And the reason I think that that would be the case is because notice how in 2021, when Bitcoin topped out at 64,000, we saw a very strong decline in price. Whereas this time when Bitcoin came up to 69,000, we saw a lot more of a slow approach to the decline in price. And then we didn't necessarily see this type of vertical drop. We more so stair-stepped our way down. That would make me assume that a break above 44,800, invalidating the head and shoulder neckline, which is a bearish pattern that we need to invalidate. And then secondly, we go ahead and validate this Adam and Eve bottom, would allow Bitcoin to test 49,700 on a $50,000 level, converge with its 200-day moving average. And if we really see some strength, we could potentially even come to 53,000, which would be the midpoint of this range of this channel that factors in the 64,000 and the $69,000 top, and then the 2 lows that have recently formed. The midpoint of that range would also be right above 49,700 and our 53,000. And the good thing about this scenario is if we do that, that would actually put Bitcoin right at the 20-week moving average to have a cup of coffee here, potentially find support at the 50-week moving average, which is currently sitting around 47,000 US dollars, while the 20-week moving average is right around that 49,000 US dollar level. And so if we were to see a break of 44,800 at this point, it would be the final confirmation that we need for the bulls that Bitcoin might be ready to enter price discovery, maybe not in the immediate short term, but certainly in the medium term to long term, potentially even see new all-time highs by the end of this year. You can see how much we have all of this space here until 2023 for Bitcoin to see that scenario play out. If we get confirmations hourly and 4-hour, first and foremost, above 44,800, not a surprise here that we're seeing the 100-day moving average also showing confluence with this level. Now, it's quite clear that right now, institutions have decided to get in right at 41,950, because notice how the only institutional volume, the most amount of institutional volume that we've seen with this move to the upside so far, pretty much stopped at 41,950. So far, we've seen light volume above 41,950. And it's not a surprise that when we came to test 44,800, it's the first time that we're starting to see the bears really come in and challenge the bulls at this extremely important resistance level. And we're not necessarily seeing institutional type of sell pressure, but we're seeing enough sell pressure to combat the amount of buy volume, which is pretty light right now at 44,800, which also puts this scenario on the table where we see sideways price action before we break 44,800. And I talked about this yesterday, that if we reject 44,800 here in the immediate short to medium term, there is a potential that we could come down, test 41,950. The most bullish case would be to hold 41,950 and then move sideways inside of this range with a resistance of 44,800 and 41,950. And then maybe on the 5th retest of this resistance, we can finally get that break. But the reason this is certainly a highly probable scenario is because of the fact that, once again, we might want to expect a slower move to the upside right now versus a parabolic, exuberant rally to the upside. Nothing vertical. We want to maybe assume something a little bit more of a stair-step approach, just because of how Bitcoin initially started to come to the downside with this move. And so very nice to see right now Bitcoin right here above 41,950, now testing this 100-day moving average. I think it's going to take a little bit more effort to get to the 200-day moving average, but it is certainly on the table. I think that we could confidently say here on the Snipers channel, if we get a break of 44,800 hourly and 4-hour confirmations, that our immediate short-term to medium-term target for Bitcoin is going to be the $58,353 level, just based on market structure and the schematics of this Adam and Eve bottom. And so I think that that is certainly going to be a very positive scenario for Bitcoin, and it just might take some time, though, to get above this $44,800 level. But that is right now the final confirmation, which will invalidate this bearish pattern here, this head and shoulder pattern where we have this neckline. It's a very good thing that right now we're coming and testing this as a major resistance, but we've yet to see institutional volume above 41,950. We've seen it all the way up until 41,950. So let's say we do come to 41,950 and it breaks. Well, then the only major support below that would be the 50-day moving average, right around 40,000 US dollars. I don't want to see 38,000 come back on the table if we don't want to assume downside. And I think that 38,000 is clearly a major support with our previous weekly open, our volume support at 38,000, and our current weekly open sitting at that level. So with our new monthly open, by the way, we're sitting at 43,000 US dollars. So that's just something to note for those that watch the Audible version. And then here's some other revolving parts of the market. As you guys know, we're the 4-dimensional channel, the #1 cryptocurrency analysis on the internet, youtube.com/snipers. Remember to smash the like button for the YouTube algorithm if you support the 4-dimensional analysis. So when we look at the Ethereum to US dollar price, you can see we're also finally getting above this 50-day moving average, sitting right around 28.75. Our initial upside target right now for the Ethereum to US dollar pairing is going to be 34.54, as long as Bitcoin can stay above 41,950. The reason I say that is there is a potential right now that we could see some strength with the Ethereum to Bitcoin chart. If we're starting to see fear wane off in the market, then this Ethereum to Bitcoin chart still has the chance of breaking out of this symmetrical triangle. This right here is actually going to be one of the most important confirmations to assume Bitcoin in the macro is going to surpass 69,000 US dollars and continue to price discovery, potentially head towards our macro target for this bull cycle of around 150,000 to 250,000 US dollars. This Ethereum to Bitcoin chart is key because this chart showing strength is going to be a very strong confirmation that there's a lot of confidence in the market, and that could also lead this chart that factors in altcoins outside of Ethereum to get back inside of this ascending triangle, which is inherently a bullish pattern, and then see further upside. Right now we're breaking down. So one thing we have to realize is literally yesterday we formed new lows on the altcoins outside of Ethereum chart, which means that could we assume that this move for Bitcoin is just altcoins outside of Ethereum moving into Bitcoin as a hedge from maybe sideways price action or even downside in the market? Well, that wouldn't be the bullish thesis if that's the case, but we are seeing signs of that. So this is something that we really have to keep in mind, is whether or not this really is trying to break down. So far, it looks like it wants to, but that could change. It's a very bullish pattern here, this ascending triangle, but it's failing at this point. And so we really need to monitor this, because the move to the upside with this chart is also going to be a very strong confirmation Bitcoin wants to continue to price discovery. But this moving down would actually take that scenario and weaken that thesis that Bitcoin wants to move to new all-time highs, and it'll strengthen the thesis that there's fear in the market that we're going to see continued sideways price action, maybe even more downside, because why would people hedge away from altcoins if we're going to be seeing further upside? And altcoins, of course, being lower market caps, inherently have higher risk, but they have a lot higher of a potential of seeing upside. And so with the total market cap, notice how we're back above 1.78 trillion. We want to stay above this level, and it looks like we have dodged a breakdown of this macro channel where Bitcoin tested that level as well, the $34,788 level. The total market cap showed a little bit more weakness by wicking below this channel support. But now you can see we've actually come back above it. So that's positive. We want to stay above 1.78 trillion. As long as we do, the next upside target is 2.259 trillion for the total market cap. And then One of the biggest puzzle pieces we need to monitor here is the DXY at this extremely important resistance level, where it started a bullish rally for Bitcoin to see new all-time highs in 2017. It started the bullish rally in 2020, and now we're back here right now as we speak today, testing this resistance. If we break above this resistance here for the DXY right around 97.7, then that wouldn't be a good thing for Bitcoin. And then if we reject it and we come below 95.885, that would be a very good thing for Bitcoin when it comes to the bullish perspective. So that's what we're monitoring. We're either going to break this resistance or we're going to reject it. And we've already rejected it twice in the past, and it's allowed Bitcoin to see new all-time highs, first to 20,000 and then to 69,000 US dollars. Who knows if this rejects again, maybe that's the $150,000 to $250,000 level for Bitcoin. But if we see some strength here, or we see some sideways price action, that could slow down that process. And then the S&P 500, as we've been talking about, is still showing weakness against the cryptocurrency markets, at least in the immediate short term. Just notice here on the daily chart how we are still below the 100, 200, and the 50-day moving average with price action. It's not seeing as much strength as Bitcoin. We're currently red right now while Bitcoin is green. This has been no surprise because we know on the macro analysis that we did 2 days ago on the monthly chart, the S&P 500 in February breached its January monthly candle lows, while Bitcoin didn't decide to do that. It stayed within its January range. And so the S&P 500 and traditional markets are certainly showing weakness right now while Bitcoin is showing strength, despite there are times that the S&P 500 are extremely correlated to the Bitcoin price. Right now, we're seeing, especially with all the fundamentals, I guess we can talk about Ukraine and Russia. Once again, those are all narratives. My heart goes out to anyone being affected by what's happening there in the Ukraine. But those narratives are certainly strengthening Bitcoin's thesis. Not a surprise, once again, for those that have been tuning in our channel. During geopolitical tension, Bitcoin is the best asset to be in. And then you can see clearly right now, gold is moving to the upside, and even U.S. oil breaching $100 per gallon, seeing some new yearly highs right now, highs that we haven't seen since 2014. Certainly most likely because of what's happening in the Ukraine and Russia. And so we're seeing commodities strengthen, the prices are coming higher, Bitcoin is strengthening, being used as a financial payment mechanism during all of this tension. So once again, Bitcoin has so many different dynamics that make it such a great asset, and that's why we're able to see upside despite traditional markets not seeing upside. And with that, I don't see any other revolving parts of the market that are really too important right now. What I will mention is Bitcoin dominance is seeing some new highs right now for the year. It is moving up. This is a sign of fear in the markets. A lot of times when Bitcoin dominance moves up, you can see in the past, especially here, what really matters is what happened back in the 2017 rally. If we look at Bitcoin dominance, during the end of that rally, it just continued to move to the upside. And this was a bear market that we got into. But Bitcoin dominance right now, it's not showing that much strength, but in the immediate short term, it is showing some upside, indicating that Bitcoin is certainly being used as a safe haven right now in the cryptocurrency market. So just something to know. I wouldn't say it's a bearish puzzle piece because the DXY and the Bitcoin dominance chart were very correlated 2017 and 18. This year, that decoupled. And so it's a very different market. We didn't have the metaverse. We didn't have GameFi. We didn't have a lot of the revolving parts that we have now in the cryptocurrency market back in 2017 and 18. So I don't think we need to put too much weight on what's happening to Bitcoin dominance, but I think the altcoin charts are very important for market sentiment. So thank you all for tuning into the Sniper's channel today. I needed to get on the computer just because we did a very quick update yesterday and it was exactly on the dot, as our analysis is always exactly on the dot. We said 44,800 was going to be a major resistance, and that's the range that we're in, Snipers. 44,800 being the major resistance, 41,950 being the major support. As long as we can stay inside of this range, Ethereum has the potential of also hitting 34.54. The Ethereum to Bitcoin chart has the potential of seeing strength, allowing Ethereum to the US dollar pairing to move up. And so that's what we really want to see right now. And then, of course, the biggest confirmation that we need for the macro is Bitcoin getting above 44,800 first, holding it as support, and then conquering 49,700. But we could confidently say at this point, if 44,800 breaks hourly and 4-hour candles to start, then we could potentially be on the way to 60,000 US dollars. And then over the next few months, possibly by the end of this year, we could be seeing new all-time highs for Bitcoin, which is why it's so important right now that we're testing 44,800. And with that, thank you all for tuning into the channel today. Hope you enjoyed this update. Smash the like button for the YouTube algorithm. Subscribe to the channel if you haven't yet done so. And until next time, snipers out.